Yeah, the way that I would frame it is for basically the last 3 or 4 decades, the period where we've had the peace dividend paying off. Most of the risks in the financial system were internally generated. So central banks and regulators worried a lot about borrowers maybe taking on too much debt, defaulting on those loans, creating a capital problem for banks, and maybe setting off a bank liquidity run. That would be the causality chain, if you like. The way that, and we will always worry about those risks, and we do. But as Joe just intimated, what's fundamentally changed now is that we have moved into a different type of a regime where certainly the risks that most keep me awake at night are those that are generated from outside of the system. Right. And the two that loom large, really there's 3. Geopolitical risk is one, operational risk, and I'd include cyber in that, but even more broadly than just cyber. And the third would be climate. And what makes this complex is because these risks are generated from outside the system, we need a different type of toolkit, right? And they're cutting across the economy and the financial system in very complex ways. And the playbooks that we do have are largely being built for those internally within system disruptions. And so these risks that are bearing on us from outside the system just demand a whole different framework.
So let's play that.
So there's 2 things there. The first thing is historically, and even just at a conceptual level, our super fund industry should be good for financial stability. Talking about long-term investment horizons, the system is closed loop, so there's more liquidity going in than's coming out structurally. Right. There's very limited leverage. And so these factors, and of course our super fund system, unlike some other pension fund systems, we don't guarantee returns. Right? The investment risk is passed through to end investors. So conceptually, that should mean our system is sort of a net plus for financial stability. The challenge, or what's new, is the point that you just made. The sheer size, the footprint, the scale of these institutions now means that there's a different risk dimension and a different way that the industry could transmit, not be the source of systemic risk, but transmit or propagate stress if there was some other shock imposed on the system. So if we found ourselves in another crisis, say, where there's a liquidity shortage out there in the financial markets, let's say early withdrawals of the system were allowed again. Right. So you had a net liquidity withdrawal from the system. If you had a number of things happen simultaneously, you could see a world where super funds might have to, say, sell down their significant holdings of bank securities, and that could create transmission risk. So right. I just want to be really clear. We don't see them as a source of systemic risk by themselves. Mm-hmm. We are doing more work, however, to better understand if a shock were to occur, how they could inadvertently potentially transmit a stress through the system. That's not a forecast. Right. It's just an area we're doing work in.
Could they play the opposite role of dampening retail products being marketed to give households access?
Exposure, yeah.
Is that a good thing?
Well, I think that's another big question that we sort of pose in Australia. We want all Australians to have some access to investing and making their own decisions about that. Now, clearly, our legal regime, as in other countries, tries to protect retail investors or consumers, and so-called sophisticated or wholesale investors have more freedom of movement. But there's a deep philosophical issue in there somewhere that says, oh, well, why are we treating retail that way? Right. And so the bottom line is, I think we can talk about whether the regulatory settings are about right between retail and wholesale and retail and sophisticated. But the bottom line is, I think from a policy perspective, there are some interesting questions to raise about to what extent can we facilitate or encourage, my words, safely, retail exposure to some really interesting things going on in the private markets. Right. So